Hi, I'm Greg Herlean, founder of Horizon Trust Company. Super excited to be with you today. We started doing these webinars and sharing them with clients and non-clients alike a few months ago. And the purpose behind it was primarily to educate, train, teach on kind of alternative asset classes and giving people options. A lot of our clients, we've got thousands of clients that have retirement accounts and did not know they can use their monies to invest in alternative assets. And as most of you know, if you've heard me before, we talk about real estate often. Why? Because that's a lot of my background. But I would say that Horizon Trust is purely based upon helping individuals use their retirement funds and unlock those funds and invest them in what they know and understand. And so that's what we focus on at Horizon Trust Company. Like always, half of you listening are most likely clients of ours. The other half of you are not clients of ours at Horizon Trust Company. But here at Horizon Trust Company, our team and staff is here to support you in whatever it is that you want to invest in. Today, I'm really excited to share and introduce with you actually a new friend of mine, Jeremy. Jeremy Blossom, I would say, I mean, he's a celebrity. He was on The Prophet, the show, on CNBC, I believe, a couple years ago. And as fun as that might sound, one thing I've learned about, celebrities and these on these shows is there's much more behind them than you actually see in a TV show. And so Jeremy has an incredible background of where he came from, where he is today. And I'm really excited about today's subject. It's something I don't know a ton about. I would say that in the last year, we have seen more people investing in this subject that we're going to talk about today than I've probably seen ever. And I think in the history of Horizon Trust Company. And there's probably a reason for that. And that's partly why I want to have Jeremy on today. So Jeremy, look, family man, a successful businessman, and from what I know, really loves the alternative asset place and is also dabbled a lot in self-directed IRAs. And so welcome today, Jeremy. Thanks for being here.
Thank you so much, Greg. It's an honor to be here with everyone today. This is really exciting, because a lot of people are really interested in what I think I'm going to be talking about, because there's a lot of things happening inside the economy, and people are probably all feeling a little bit of unease or uncertainty, and I hope I can provide some clarity to them today.
So the secret and that we're going to talk about, and not such of a secret, but I think people will have lots of questions about, is precious metals. And when I hear precious metals, I think of it as someone that's telling me that they invest in real estate. Real estate can go all over the place, right? I mean, multifamily, residential, Airbnbs. When I hear precious metals, I kind of feel the same. And so I'm really looking forward to what you have to share with us, with my clients, with our clients at Horizon Trust, but also with a lot of new listeners that we have on today that might have an IRA or an old 401k and didn't really know that they can move those funds into an account investing in precious metals. And so, Jeremy, you want to give a little background on yourself, kind of, where'd you start and how you got where you are today?
Yeah, absolutely. I think this background will help and provide some more clarity too. So I started off working at a commodity hedge fund here in Irvine, California. I started off at their internship program and didn't know the first thing about commodity trading. And frankly, I got really lucky to land that internship. They give you a year to get your licenses and to kind of figure out exactly if this is a place you want to move your career into or not. And after 10 months, I was completely hooked. At 26 years old, I became the youngest principal in the hedge fund's history. And we grew rapidly through 2004, all the way through 2008 and 9. And our firm actually made 1.5% in 2008 when all the other investments that were out there, a lot of the stock portfolios were decimated. Our fund sort of survived. And it was there that I really, truly understood the value of alternative investments, the idea of diversification, and seeing firsthand the benefits of it when someone does that. I left that firm in 2011, shortly after my daughter was born, to become a financial advisor. I started my own independent advisory firm, and I specialized in helping people find more money managers like that. I believed in kind of creating a portfolio of these money managers that had alternative investment solutions and strategies and ideas. I did that for 3.5 years, and I still was feeling like there was a bigger thing for me to go do, Greg, because as a financial advisor, one of the dirty little secrets, if you will, is I can only recommend products and services under my licenses. If it was outside of it, I couldn't talk about it, I couldn't recommend it. And sometimes those ideas that my clients would bring me sounded incredible. And I would do all the due diligence with them and talk to them about it, but I couldn't say yes, they should or shouldn't do it. So I said, you know what, there's something wrong with this system. And I sold my financial advisory firm in 2013. And I decided to get into the business of connecting these really great investment opportunity ideas in real estate, stocks, whatever they may be, with investors. So I started a marketing company. And I've been doing that marketing company for 10 years. We became an Inc. 5000 company twice. And that's how I was able to get featured on CNBC's The Profit. I was also featured on the Self-Made Mansion show for HGTV for buying my dream home on there as well. And I've had a close hand at investing ever since. So since 2004, every single year I've had something to do with it, whether that's personally or professionally or both. And it was in 2020 that the alarm bells went off for me. Not because I was experiencing what everybody else was, washing my groceries when I was coming in through the door and wearing masks and gloves and freaked out. It was because of the Fed's response, right? Its stimulus response to the COVID crisis and what the rest of the world followed suit to do. And I'll talk about this, but what I believe, Greg, is I know enough about macroeconomics. I know enough about how commodity trading works and how currency trading works and how the stock market works, that there was a point of no return that we crossed once that legislative bill was passed and we put $4.2 trillion into the marketplace. And so about, October of 2022, gold was under $1,700 an ounce. I started to say, this is it. This is the time for people to take a hard look at their investment portfolios and think about diversifying outside of cash. So I love real estate. I own real estate. I love real estate. I love stock trading. I've got nothing wrong with crypto investing if that's something risk appetite wise for you. So I'm a huge proponent of active investing strategies. And I don't believe one investment's better or worse than another. The only thing that I'm really negative against is anybody out there who's got any major position in cash. And as a financial advisor, I remember telling people that if they were uncertain, that they should go to cash, right? You want to get out of the way of what could happen. And so I decided I wanted to go in and say, all right, you could go to cash. But now, very rare, by the way, this does not normally happen. But since 2020, the onslaught and the speed of which our dollar is depreciating based off of how much money we've been printing is at a place where it doesn't make any mathematical sense, in my opinion, to sit there and have money sitting in cash. Instead, you need to have it in something else. And in my opinion, the best, most secure form of money has been gold and silver for 5,000 years. And so that's why you're seeing so many people who are now using this amazing tool known as a self-directed IRA, and they have a bunch of cash sitting in there and they're saying, okay, I need to diversify. But that's basically what my background has been, is I've had alternative investments ingrained in me at a hedge fund at the highest level, dealing with high net worth investors, to being a financial advisor, to then getting in on the business side of it and connecting people with all sorts of investment opportunities. And I'm at it again, but this time I'm actually personally coming behind it. I've partnered with Advantage Gold, which is the #1 rated precious metals company in America. And I have joined them to help educate people on the benefits of diversification through precious metals.
So, that's unique. I mean, not a lot of people been through that cycle where you were a licensed financial advisor, right? I mean,
Yep.
you were in the thick of that. moving to, and still doing real estate, and now you choose this.
Yes.
Now, it sounds like you also invest in other things, like you had
Yep.
mentioned, but you choose in particular this category of gold and precious metals. So can you dive a little deeper? Obviously, the last year at Horizon Trust Company, we've seen more people use the retirement funds for this asset class than we ever have. And probably because of what you said. I mean, people are finally figuring out, like, wow, inflation's crazy. The debt, is out of control. The dollar, so I'm assuming, right? It's an assumption based upon the waves of what we see here. People just didn't know they can use their retirement money to be buying this asset class. But outside of retirement funds, you can obviously, I always, most people probably thought that they can only buy with non-retirement funds, right? With cash, they could go buy gold bars or different metals, etc. I'd say that's probably the first message on a bias perspective that I'm sharing with those listening today is for those people that did not know, this might be a new concept for some of you listening. You can actually use your IRA, or if you've got an old 401k or TSP or 403b from a previous employer, you or your spouse, you actually could qualify most likely to unlocking that and using it towards an asset class like this. Now, you've chosen this, and there's a good reason. And the more I learn about it, the more I'm around you, the more I think I want to, spend more of my time on. We talked about rocks rather than stocks.
Yeah.
So tell me, why this asset class for you, and why you are seeing what we're seeing, so many people moving to gold and precious metals.
There's an old Mark Twain saying that says that history may not repeat itself, but it sure does rhyme. And we don't need to look very far back in our US history to see the parallels between what happens when we see a rapid decline in the value of our dollar and inflation go up, and which asset classes perform well and which asset classes do not perform well. And the very first major bull rally we ever had in gold and silver happened in the late 70s and early 80s. The catalyst for that, Greg, was Nixon taking us off the gold standard in 1971. When our US, before that time, the US dollar was attached to the value of gold, and it was lockstep with that price. And as soon as they said, we do not need to be locked to the price of gold anymore, we became 100% a fiat-based currency, and therein went the free fall of the dollar and its value. And in inverse relationships, that's when gold prices went up. So it's really important for everybody to understand that gold is very simple. This is another reason why I love it, right? There's no CEO behind gold. There's nothing fancy about it. There's no, there's a whole bunch of things. It's just gold, and it's been around for silver. This has been around forever. And so when the dollar drops in value, gold prices go up. When inflation goes up, gold prices go up. So we saw gold prices go from $45 an ounce, well over $800 an ounce, and silver prices go way up as well. And that move was based off that. And I think that what we're seeing today is just the beginning of a very similar decade. The 70s, when the dollar went off the gold standard, we saw CPI numbers go up. We saw the Fed do the exact same thing it's doing now. It raised rates, and then it said it's going to lower rates again. The Fed has got an impossible job. It's got an impossible job. It says it's going to lower rates 3 times this year, maybe more. But the thing is, it's always looking in the past. It's looking in the rearview mirror, and it's trying to drive 100 miles an hour forward, right? So because of this, it's going to make mistakes. It's going to move slower or sometimes too fast. It's going to be over hot. Make it too hot or too cold. And I believe all of that doesn't matter at this point just because of the sheer volume that we've had. But we will see CPI numbers go up. This is consumer price index, or cost of goods and services. And how many of you are at home right now have seen this for yourself? You go to the grocery store, and what you used to come out with, maybe $110 of groceries, that'd be pretty good for a week, right? And now $110 is like a few days worth of groceries max. Egg prices are up 120%. Fruit prices are up. My grapes, I love grapes. I love them. And they're like $9 for like a little thing of grapes these days. And it's just insane. So everywhere we turn, prices are going up, which is all a byproduct of a depreciation of our dollar. So I think that that's one of the big reasons that we're going to see it. Here's what I tell people to think about it like this, is I'm calling it the golden wealth window, where there's more factors that drive the price of gold than just the dollar, right? Geopolitical turmoil, 70s were full of that. That's a big driver of it. Volatility in the stock market, okay, especially during election years. We're going to, I think, experience something very similar to that. So we're also seeing something really interesting happening too, where the Federal Reserve is buying more gold than they've ever bought since we've been tracking them buying gold 50 years ago. More gold. So and when you go onto their website, you can go onto the website and they explain why, and they say the exact reasons why I'm telling you. It's a store of value. It works well during times of uncertainty. It's a hedge against inflation. It's a hedge against stock market volatility. It strengthens their overall economy. And so they've unleashed a bunch of dollars. They've flooded the markets with it. Our M2 money supply is through the roof. And they are themselves trying to secure and stabilize our own economy through gold. So one of the things when I was working for the hedge fund that they would say is, don't fight the Fed. The Fed is the one that's making the rules. The governments are the biggest drivers of any markets, right? For good or bad. So if the smartest money, the biggest money, and the people making the rules, they're making the rules as they go along, are buying gold at record amounts right now, what does that tell you? More importantly, what is it that you don't know? And I'm hoping I can today share some of the things that you don't know and draw that connection for you guys. But it's because we're seeing that there is a lot of things happening. And then vice versa to that, gold has been an insurance policy. It's now an opportunity for growth. It could be a growth engine and an insurance policy at the exact same time. And for 10 years ago, I wouldn't say that. That's not how I would position gold. I'd say it's a good diversification. It's a good insurance hedge, but not necessarily a growth hedge. And now I think it's going to be one of those things that could be both.
Yeah, I mean, and what's great too, as far as gold isn't. I mean, you can explain this better than myself, but when people are buying it in particular, most of our listeners have IRAs or retirement accounts. It's not something that you need to transact in a day or two or in a week. You can, but it's not typically that type of asset class. And that's the nice thing about people with qualified funds. If you're listening to this and have an IRA and using those funds, you can sit and hold. You have time to sit and hold. And not only are you you're hedging against what's going on with inflation, like you said, there's some pretty big upside. And so that being said, I wanted to say a couple things here, and then I know Jeremy said he had a couple slides he was going to share with us too, so we can share with him. But beforehand, I wanted to share with you Claudia on our teams here. A lot of you have probably met Claudia and or her team. She helps with all new business. You might have seen her if you've emailed me personally. A lot of times I'll say, hey, Claudia and her team will make sure they get back to you. She helps a lot of our new business partners with all their new business coming in. And so she's here today, and she's also going to be fielding questions. So feel free, while Jeremy and I are talking here a little bit, ask some questions. And you can also put a face to the name here. Claudia is here every day and is also able to help kind of answer questions as you get transitioned over. Number two, I also wanted to share is something I didn't share in the beginning, is I am not a financial advisor. All right, there you go. Thanks. You put it right up there, Alex. And nor a CPA. And so, look, this is really to educate you. Our job and goal is we want to give you the most amount of tools and information for you to go and make decisions on behalf of your retirement account. And so that is really our goal. This information, not only are you listening to today, it's going to go also for our clients that are current account holders of ours. There's an investment corner where you can actually learn about this and other assets. We want you to make those decisions on your own. And the last thing I'm going to share, and I'll probably share it a couple more times, is Advantage Gold. I think, Jeremy, you guys sent us over a link for those that we're not going to be able to answer every single question. So throughout this process, Alex, our team, will put up the link that you provided for us, Jeremy, as well as Horizon Trust Company's link. If you're looking to set up a self-directed IRA, you can fill out the link. You can also fill out the link for Advantage Gold and just learn more about that subject, which I think is really important. When you have questions and you call us, you're like, hey, look, I'm thinking about maybe buying this or buying that. We're not those guys. Our company is here to help take those instructions. And so you'll have a couple links that will pop up if for those of you that want to, after the fact or during, set an appointment or find out more. We're here to answer your questions. First and foremost, I'd say that's one of the things that why we started this is we felt like a year ago, clients were coming and working with us at Horizon Trust because they're so excited about unlocking the retirement accounts and investing in alternative assets. And maybe they flipped on maybe one real estate deal, or they invested in a business. Well, then that money would sit back in their account at Horizon Trust, and they're like, well, now what do I do? And so we wanted to provide a forum where people can learn about what other clients might be doing as well. And so that's really where this came from. And so we're really excited about it. So that being said, Jeremy, I know you've got you got a few things, I think a few slides that kind of talk a little bit more deeper about precious metals and gold and or silver. And then I've got a couple questions too, or comments about the process for those individuals that are like, hey, look, I like what Jeremy's talking about. How does Horizon Trust Company work and my IRA or retirement account work in conjunction with buying that kind of asset class? So, Jeremy, do you want to jump in?
Yeah, let's do this. And just like you, Greg, this is why I was so excited to do this. You're a big believer in education, and so are we. We're not financial advisors, and I'm not going to be able to go and make any specific recommendations to buy or sell anything inside your portfolio. What I can do, though, is I can show you some data and some information so that you can ask yourself, how is this going to affect your wealth? And that's what we're about. We're about protecting your wealth from the falling dollar. So that's everything that I always talk about is educate, protect, and connect. The connection part is with Advantage Gold, and they've got the most amazing team. They've been around this is their 10th year this year, and they're the only precious metals company in America with independently audited financial statements, as well as they've been endorsed by Mark Levin and a bunch of other people. But these people have been world-class when it comes to customer service. And it was one of the big reasons why we all kind of came together, because Horizon Trust has world-class customer service. And so kindred spirits and like-minded people tend to hang out. So we already went through my background. I'll go into this, but here's my approach, right? And I love this. This has been something I've been doing and saying since my time at the fund, where I learned this. And it was because this was the hedge fund manager's approach. When I asked him, how do you go about allocating, investing, and trading in such a volatile, dynamic marketplaces? And he goes, Jeremy, it's this simple. It's not easy, but it's this simple. And it's by number 99, Wayne Gretzky. And he says that you want to skate to where the puck is going to be, not where it is. And that is so true with life and anything else. My son's 9 years old, and he just got into a club soccer team. He's super excited about it. And he wants to score more goals. And I said, well, if you want to score more goals, the way to do it is you got to go where the ball's going to be, not where it's at, man. Don't keep trying to chase down that ball. Get open, find opportunities. And that goes for both protecting your wealth and building your wealth. You got to have one eye open for new opportunities that are out there, and one eye watching your current investments and asking yourself, how is the current marketplace going to affect my portfolio? And in going forward in the future, how is it going to affect it? Now, 2020 is 4 years ago. Seems like it was yesterday for some of us. Some of it feels like a lifetime ago. But the information that's happening, how macroeconomic works, is not something that is going to be, earth-shattering right now, today. Watch out for something tomorrow at 10 o'clock. It's going to happen. To your point, Greg, these are things that I'm looking at to happen between 5, 10, and 15 years. And this is really why a lot of people who have money in cash they're thinking the same thing. They've got long-term investment horizons. And so precious metals is one of those asset classes that just fits really well into that long-term investment horizon perspective that people have. So there are a major threat, and I have a big presentation that's a couple hours long, and I'm not going to bore you guys with it. I've got just a few, and it's really this rising debt issue that I wanted to show with everybody. And on the very last trading day of the year, it wasn't with a bunch of fanfare. Some media companies talked about it, but this is one of those things that it should be making daily news every single moment, because we're simply ruining our future by this trajectory, but that is that our nation's debt crossed over $34 trillion for the first time in history on December of the last day of the year. And you guys, that's a mind-boggling amount. If you were to stack a dollar, okay, on top of each other and stacked another dollar, another dollar, another dollar, you'd be able to go to the moon and back 3.5 times with $34 trillion. That's how mind-boggling $34 trillion is. We simply just can't understand it.
How many gold bars is it though? How many gold bars?
34 trillion. A lot more. Yeah, there's 34 trillion is just unbelievable. The whole market cap for gold, just so you know, just in comparison to it, they estimate it to be around $13 trillion. That's the whole market cap for gold. So the debt alone is 3 times bigger than our whole market cap is for gold. So that's also roughly the value. This is the value of China, Germany, Japan, India, and the United Kingdom's economies combined as far as our debt is concerned. I really want people to just understand what $34 trillion is. Now, we all know the thing about debt, right? We know that debt has to be repaid and that debt has an interest rate or a cost that's associated with it. Well, we now just went over $1 trillion in debt. Our interest payment is now $1 trillion. So our defense budget is $800 billion. Okay, that's what we spend. We have the biggest defense budget of any nation in the world by a landslide. We have a lot of insecurities, I guess, as a nation, and we want to really pump a lot of money into it. And when we go
crazy, Jeremy, this is, I mean, are you guys grasping this? Sorry, I had to interrupt because I knew it was bad, but I think when you hear it and see it, it's a whole different perspective. And I that's kind of your point with this is this is not getting better. Not getting better. Sorry, I want to emphasize.
Please pipe in. And I felt the same. So look, this is my point. When I saw your aha moment was my aha moment in April of 2020. When I saw what they were trying to do and the amount of where we're at debt-wise, forget about it. What we've done since the turn of the century debt-wise. And then they said that, and I've got a slide that is sad and gross and really just puts the bow on this whole conversation. I have had all this. And so I've literally stepped away from that company to do this full time, just to educate people. It's why I joined the Vantage Gold, because there is no turning back from this. There's no switch. You can't unprint money. There's nothing we can do. It's a painful road is basically what I'm trying to say. So the net interest rates cost is sort of 650. Now this is net interest rate, not gross. Gross is over $1 trillion. Our net interest is $659 billion. It's absolutely been skyrocketing because what? They have raised rates, right? So when the federal government raises rates, they're raising rates on their own debt that they have, which means their interest payments are going to be continuing to go higher. And this is the slide that I really wanted to show everybody, Greg. And this is the one that makes me really sick and just really puts a bow on the conversation. So when our founding fathers started this nation, it took us 215 years to reach an accumulation of $7 trillion in debt. We've added another $7 trillion in debt since March of 2020 alone. It has been this year, this month marks 4 years to the day that we shut down. We shut down just before my birthday on March 15th of 2020. And we are now in this 4 years later, we've added a mind-boggling $7 trillion, which took us 215 years. In my opinion, Greg, I believe that our COVID response, our fiscal COVID response, is the equivalent of us going off the gold standard back in 1971. That's why I want everyone to wake up and say, okay, because that was monumental. What Nixon did, that was huge for the dollar and huge for the price of gold and for our economy. And so we did the exact same thing with COVID's responses of $4.2 trillion, and it's continuing to grow. And we started that, okay, when we were already $20 trillion in debt, when we released $4.2 trillion into the marketplace. So that's really what I wanted to kind of show everybody, is that this is the big, aha, like what do we, what is it that everyone needs to go and see? Our debt is growing at around $2.1 trillion a year. Canada's entire GDP, our friendly neighbors to the north, is 1.9 trillion. Our debt is growing faster than their GDP. And we don't need to overcomplicate this, okay? We don't. A lot of people want to try to overcomplicate this and come up with arguments and try to figure all this out. It's as simple as think about this as a family. And you have a family where 40% of their income is going just to pay the minimum payments of their credit cards. Is that a healthy economy? Is that a healthy business? And that's what, when we go pay our taxes next month, 40% of every single dollar we go and pay Uncle Sam is going to go just toward the interest payment. And it is estimated that by 2034, 100% of our personal income taxes are going to go to pay for just the interest alone on this as it continues to grow.
Wow. Well, those were some painful slides.
Yes.
But I mean, I think needed to hear. I think everyone hears about our debt. I hear about it, right, all the time. But like seeing it in particular is another level. At least, I'm obviously a visual learner. So, look, let's talk about maybe some of the details of this. So I think we understand the message of what's happening and what's happened. And obviously the message of buying gold and precious metals is an option that people have with their IRAs. I guess a quick question that I might have for you is this sounds, an example, this sounds, like, okay, I need to be buying gold with my IRA. Well, can I buy any gold is my first question. And do I have to buy, is there a minimum? Do I need to have $100,000? Like, those are my first two questions. I don't know. We'll get to other questions on there in a second, but I feel like those are, answer those two things.
So no,
because I see these Trump coins online, and
no, you can't buy.
I'm not going to go political here. There's Biden coins too. There are all the coins out there, but which precious metals, and there's others. I think Aaron Rodgers might have a coin too. But go ahead.
Yeah, again, I won't go political either, but you can't buy a Biden or a Trump coin and use that inside of your retirement account. Here's a lot of people say that doing it through your retirement account is actually the safest way to own precious metals, because the IRS mandates that there is a certain level of quality that the coins need to be at. They need to be minted by only a certain few mints. They need to be of a certain quality. They can be a certain weight, meaning in size. And the IRS spells all of this out in detail of what investors can do, which really makes the pool of options very limited. And the grade and the security, the safety, and the value is the absolute best it can be, because you're not buying these collectible coins from God knows where, and
all that matters. I mean, that matters. You can't just be like, hey, I heard Jeremy talk about buying gold and precious metals, and so that's what I did. There's approved, and there's a list of what qualifies and does not qualify with the IRS.
That's right, with the IRS. And so what's really nice, and this is something that everybody should be aware of too, is RMDs, required mandatory distributions, happen at the age of 70 and a half. You have to start taking distributions from your retirement account. The government, the US government, IRS, only allows you to take physical possession of gold and silver. So if you own a stock portfolio or ETFs or futures or whatever it is, and then you're 70 and a half and you want those stocks, you can't pay the taxes on it and get the stock certificates mailed to you and then put them in your safe. They just won't allow you to do that. But because gold and these particular ones were IRS approved, there's another form of money. The IRS will allow you have to pay the taxes, we all have to, but you can actually take physical distribution of these actual coins that you bought 5 years ago, 10 years ago, 15 years ago, and hold on to them and use them and have them to be around as a form of money, as an investment, as a diversification, hedge, all of those things, which is so interesting and fascinating. And gold and silver is also the most liquid physical asset class in the world. Again, I love real estate investing. I love all different types of investing. But when it comes to diversifying and you need something to be able to be liquidated quickly for flexibility purposes or whatever happens, gold and silver provides that. So yes, there's only certain types, and you could buy platinum, palladium, silver, and gold inside of your retirement accounts, very specific types. And Advantage Gold, and we'll have a link that you guys can talk to everyone about. We'll explain all of that to you. And as far as minimums are concerned, there really isn't a minimum that you can, invest with or start off with. That's more up to you and what you're comfortable with and what you're looking to do. Obviously, there are sometimes what just doesn't make sense. If you're just getting started, you don't have any assets invested in anything, maybe build up a portfolio first and use this to diversify yourselves in, would be something I would consider doing. But yeah, so there's no real minimums for anybody who's looking to get started in this. And you can also go to Advantage Gold just to get gold and silver directly too. So it's inside retirement accounts, and sometimes people will, oh, I'd like to just own this outside, of my retirement account as well. But you can work with, as you guys all know this, but you can work with all different types of retirement accounts and roll it into a self-directed retirement account and then diversify that way.
Perfect. So I'm going to share a couple things and then we'll go to some questions here. First, thank you, Jeremy. This has been great. And we got some good questions to answer here too. So, but as far as purchasing, if you were to buy it outside of your retirement account, those metals can be sent to you.
Yes.
And I wanted to share that. I don't think most people know this, unless you already are a precious metals investor with us. Or with another trust company, and this is what my staff hates when I say is like, you can use other trust companies, you can use other gold companies and precious metals companies. Obviously you're looking for ones that have credibility, have great service, and know the business. And I would say that's the case here. And again, our job is to educate you and you make your own decisions. That being said, when your IRA, it could be a Roth IRA, simple SEP, traditional, a 401k self-directed, when your IRA is set up at Horizon Trust, wants to invest, and let's say they buy they buy gold from Advantage Gold, right? That gold is actually not sent to you, the IRA holder. Those actual metals are sent to a depository, and there's licensed, insured, incredibly, and you can visit them as well, depositories that hold those metals on behalf of your IRA. You cannot hold them. And so they're there though. And Jeremy, maybe you can explain what I'm sure I'm missing out a little bit on this. And my staff's gone and seen these as well, these depositories where the precious metals are held. And so therefore, when you want to sell, because you can also sell, when it's sold, those precious metals are either then sent to somebody or they could be sent to another IRA holder if it's sold to an IRA holder. And then the proceeds of that sale would go back into your IRA. So that's the process, is when you're buying with an IRA, you don't actually physically hold the metals. And there's probably good IRS reasons for that. I mean, you can only imagine, right? Someone buying it and then all of a sudden they're showing their gold off to their friends and it's magically gone and your IRA account goes down. We don't want that. So Jeremy, anything you want to fill in there before we go to some questions?
No, I think that's right. I mean, the one of the depositories is really close to your office, Craig, in Las Vegas, and you can go and see it, check out. Yeah. It's really close by, and you can go and see it. And look, if you have a fairly large retirement portfolio and you're diversifying it, and you may diversify into hundreds of thousands of dollars worth of gold and silver, I wouldn't recommend anybody have that at their house. Who would want to be able to hold something there? You'd want the security there. Everything that we do in anything that we're discussing here is for your protection, for your ultimate gain, for what you should be doing, what's the smartest move for it. And so it's really a great process. It's really cool. But to your point, yes, and when you want to go and sell it, you can liquidate it and the cash goes right back into your retirement account and you go use it for what other investments you want.
And in this process now, we've been seeing it. I would say about 2 years ago, we saw about 15 to 20 clients a month. We're seeing about 5 times that, 50 to 150 clients a month using and buying, this asset in their self-directed IRA. So let's jump in. Do we have some questions or no?
Yeah, we do.
So let's jump into some questions here. What do you got for us, Claudia?
Yeah, so I have David that is asking, I purchased gold at 1,700 and have held it because it's at 1,900 plus. if you had a crystal ball, will it drop or continue to rise?
That's not my question.
Yeah.
Jeremy's question.
You know, I have, I'm not a financial advisor, I'm not a trader, and I don't have a crystal ball. I'll tell you guys this. I believe that we are going to be, in my opinion, going to see the biggest gold rally in our lifetime happen in the next 5 to 10 years. So I've been very public about my predictions for where I think gold and silver are going to go. I think they're going to go continue higher. They could go up and down, up and down, up and down, up and down. You could lose money in gold and silver investing. So I want to give all the disclaimers that are out there. But
Come on, we want the crystal ball answer.
my
That's what we
personal,
brought you on.
I know my personal opinion about it is that I think that it's got an absolute amazing upside potentials for everything I just mentioned with everybody. And then some. So I don't, you know, that's why I'm here talking about it and advocating for it, is because I believe that it's got a lot of opportunity.
It makes sense. I mean, that's we never want to give that. I mean, obviously the crystal ball, it sounds like Jeremy's holding and he's buying and holding, and certain other people's strategies is also could be based upon their timeline. Like, when are they going to retire? And so it really, I think, a little bit depends on each person. And I will say, because my team shared with me here, if you go to my Instagram and message gold, we'll send you this free SDI IRA gold ebook. So message me gold, we'll send you a free IRA book. I will also say that the link is on there. So for those of you who did not see the link on Advantage Gold to get with Jeremy and or his team to learn more about the specifics, definitely contact them, set an appointment, or about the IRA. Our link's there as well. We help them. We help all clients with precious metals with their IRAs. And so, Claudia, next question.
Yeah. Can you go over a little bit about how the process works? So when they call Advantage Gold, how are they going to get to us? How are they going to get to the depository? That's one thing that I get a lot of clients just asking, what's the difference between the whole process and how is it the easiest to explain it? Can we go over that?
Yeah, that's a great question. So when you go and you fill out that link, which I recommend everybody does, because this is a great, amazing team that wants to explain everything to you, talk to you, understand who you are, what you're doing, what you're about, to help you get some of the answers for that you're looking for. But if you decide that, yes, precious metals investing is something that you want to do, you want to diversify it, they're first going to see, what do you have set up? What's your current retirement situation? What accounts do you have set up? Do you have an old 401k somewhere? Or do you have an old TSP, 403b, etc.? They'll work with your current custodian that you have and help you set up an account with Horizon Trust if you don't already have one already. And they'll help you get all of those funds that are sitting with Schwab or Fidelity. I'll pick on one of them. And they're going to go and transfer it over into the Horizon Trust account. So it's just a different type of account. I mean, it's the same retirement account. Everything's all still approved and protected. Once the funds have arrived inside of your Horizon Trust account, everything's ready to go. Then you go and build your actual portfolio. It's time for you to select the types of metals that you want to own. And you work with the team and they'll help you say, okay, let's get some silver, gold, whatever it is that you're looking for. And they'll buy the actual metals for you from the depository, or excuse me, from the mint, and buy the gold and silver. And once they do, they're actually going to ship these metals to the depository. And Horizon Trust gets confirmation that the metals have been shipped, that they're sitting there. Again, you can go to this depository yourself and go see that the metals have been listed there, and your account has now been funded and has been diversified into that physical precious metals asset class. So it's very simple. They make it extremely easy, and they hold their hand every single step of the way.
Mm-hmm.
Absolutely. Thank you so much. David is asking, can you comment on keeping gold in a safe versus a storage facility? I think we already went over it, but he's asking specifically because a depository could be taken over just like a bank.
Yeah, I mean, I doubt it. So there's a great video on our website at vantagegold.com. If you go to videos, one of our ambassadors is a guy named Jason Hansen. He's an ex-CIA officer. He was in the CIA for years. He goes to the depository and he breaks down the level of security. It is the highest level of security system that you can create the way that they even built the building, how thick the walls are, the types of security they have. They have redundancies in another location, like 3,000 miles away. It's like you're watching Ocean's 11 or something when you go through all the different steps. But this is somebody who does security for a living. He has hundreds of thousands of students that pay him to make sure things are secure. He's a client of ours at Advantage Gold. He also has his metals stored. They go and he actually sees his own metal at the depository. So he himself wanted to be like, yeah, right. Is this really secure? Same exact question. What would ever happen? And he thought that the security was absolutely excellent and top level. But you can go watch all this on your own.
And David, and that's a good question. I get it. And a reminder, if it is retirement funds that you're using, it does have to be held that way. But if it's not, it can be held by you. But I would probably say it's definitely less safe, probably held in your own safe itself.
And it's also Lloyd's of London insured too, just so everyone knows.
There's insurance. That's a big deal. And I would say one thing that has come up a lot for me is people love the subject of self-directing, and they're like, I want to do this, but I don't have a lot of money, so I only can start with $5,000 or $10,000. This is actually one of those asset classes that if you opened up a self-directed Roth IRA, this could be one of those assets you can buy with $5,000 or $6,000. It's tough to go buy a rental property for $5,000. It'd take a lot of different partners to get that done. So this is definitely one of those things that you could begin your investing as a new investor as well.
Yeah, absolutely. We have a surrender here. It says, what is the correlation between growth of debt, taxes, and population?
Say that again?
Say that again.
What is the correlation between growth of debt, taxes, and population?
Debt is growing exponentially faster than our population is, and it's not even on the same level. Our population actually, as a society, has relatively become stagnant. There's been, there's a whole bunch of really cool studies out there that's what's happened to the family dynamics and things like that. Taxes they've gone up, but not nearly to the point. They've fixed it at CPI numbers. Usually taxes go kind of hand in hand with whatever inflation is. And that's the way that they've measured that every single year. And it's hard to determine that a little bit because each side, when they take office, start opening and closing loopholes and tax breaks and things like that. But I can tell you that nothing is, as far as those three things are concerned, going from where we're at in 2000 to where we're at 2024, there's not very few things have gone up faster than that, except for the price of gold, probably.
Okay, I have somebody asking, how long on average until I see a positive return?
So look, guys, this isn't, I want to make this clear about what I'm trying to say. The argument I'm trying to make here is I know that when you're investing, you're looking for a return and you're looking to buy low and sell high, right? I'm a trader. I work for a hedge fund. I love the markets and they operate like this. This is something where I'm not talking about that. I am talking about you have money sitting in cash. Let's just go back 24 years. The year is 2000. We all went through the Y2K scare and thought all the banking systems were going to crash. The dot-com era just crashed. 9/11 hasn't happened yet, so we can go to the airport and go all the way to the gate, and it was great, and all that stuff, right? It's 2000. And you decided to take $10,000 and put it in gold. And your best friend was like, no way, man, I'm going to leave my money in cash. I think the world's going to come to an end, right? And you're like, I think the world's going to come to an end too, but I'm going to put it in gold, okay? Because I think that cash is not going to do well. And now you fast forward 24 years. Well, your purchasing power has gone down about at least 26 to 40% on your dollar. So everything's become exponentially more expensive with the person who just held in cash, meaning that what they had at $10,000 is not nearly buying them what they thought they could buy 24 years ago. They had money in that $10,000 that they had in gold. Gold prices were at $250 an ounce. Gold prices are at almost $2,200 an ounce now. So their investment went up through the roof, and now it's worth over $100,000. What risk did they take? Gold's never going to go to zero, ever. It can never go to zero. It's the only asset class that I can think of that I can say that's not going to go to zero. A stock could go to zero. Property can go to zero. art can go to zero, whatever you're thinking of, crypto can go to zero, whatever, it could go to zero. Gold can never, ever go to zero. The dollar has lost 99% of its purchasing power since 1900. 99% means it keeps losing value. So I want everyone to think about and understand here is that what's going to happen in the next 5, 10, 15 years? What do you think cash is going to do? What do you think the purchasing power is going to do? And if you feel like this last 4 years was hard, and you feel like, man, I'm making more money, my investments are doing well, but I still don't, everything still costs money. It's still, things still hurt. You still go out and you're like, dang, you're still feeling it. That's inflation. That's what you're feeling when the dollar is losing value. And folks, we went past the point of no return 4 years ago. The interest pay, there's no coming back from this. So why would, and you're worried about the stock market, you're worried about these things. Why would you leave your money in cash? Move it over. So I'm not saying, I think that there's certainly tons of stocks that have outperformed gold, individual companies like NVIDIA and whatever else, right? There's lots of these different companies, Tesla. But I'm not talking about that because I'm not picking and cherry picking investment asset classes. I'm talking about building a well-rounded portfolio that you can count on to be there for you when you need it the most. So that's why I want to really make sure everyone understands that's my perspective about it.
Jeremy, yes, sorry, you said 24 years. I just think of 10 years ago, I sound old, but like In-N-Out. I mean, it's a simple one. That one I know very well, right? Yeah, I mean, In-N-Out's gone up 30% in like the last 10 years. I mean, and I wouldn't say just In-N-Out. Everything I feel like is that way. It's at least $10. It used to be $3 or $4 or $5.
Well, that one clip went viral of a guy's receipt from Five Guys while one person bought one meal in New York for $23 for a single meal.
It's insane.
So yeah, and that's not, again, these are not things that go down, right? It's not like, oh, okay, Five Guys is going to wake up one day and be like, we're charging too much. Let's put it back down to $3 a meal. Like they're not going to do that.
Well, let's we got a couple minutes left, and I don't know if before I go there, I know there's been a couple questions. I don't think I know I don't have the answer. I don't think Jeremy does either, or at least not right now. There's been some questions about how much can I, if I only have $5,000 or $10,000, what should I buy, or how much should I buy of that? Again, I would table that for an appointment or two. One is do some of your own education on your how much you want to risk tolerance you have in certain asset classes. Number two, have an appointment with Jeremy and his team. They'll kind of talk to you about the different options that you have. And then number three, we're here to help you. So if you're looking to do this in a way that you're avoiding taxes altogether or deferring taxes, we'll help you with that vehicle. That's the other thing you mentioned earlier, that the IRS has created these rules. Same thing with IRAs. This has been around for 40 years. These rules the government's created for people to take advantage of to invest in these alternative asset classes. You just might not hear about it in general. And so this has been going on for a long, long time. Self-directing, investing in alternative asset classes like precious metals and real estate and businesses. It's been going on for a long time. The rich keep getting richer because they're using these opportunities to avoid paying taxes or defer taxes. It is a game changer. And so obviously our message is take action, invest in what you know, invest in what you like. And this is an interesting subject because it is such a hard asset, and it's a little bit easier to talk about than I think a lot of other assets out there, maybe a new business, et cetera, that has a lot more variables than gold. So I don't know if is there a question or two, or should we just wrap up here? Okay, cool. So look, I appreciate those listening here today, and to wrap up here again, there's the links there. You can always message us. You can email me or my team and say, hey, I didn't get the link, and we'll introduce you to Jeremy and his team and get you an appointment. We're here to serve you and support you and give you the most information as possible. And just to wrap up here, Jeremy, if you don't mind, share with me or us your sweet of this last week. What was the biggest sweet in your life this last week?
Oh man,
Best thing that happened last week.
Yeah, that's an easy, lucky week to ask that question. I celebrated my 41st birthday surrounded by my kids and my best friends here in my backyard. I did a catered Korean barbecue meal, watched a gorgeous sunset, told stories. I couldn't ask for anything more, man. Very blessed.
I love it. All right. Well, thank you for sharing. Thank you for being here today and sharing this information with us. And there's so much more. Like he said, you can follow us on social media, on Facebook, Instagram. get you more contact information. Jeremy does, I know you've said it, a few hours probably you could spend on this subject, but follow us, ask questions. We'd love to give you all the information you need. So thanks for being here today with us, Jeremy. Really appreciate it.
Thank you guys so much. It's been a real privilege. Thank you.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.